Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about China Cinda Asset Management Co. Limited Annual Report. China Cinda Asset Management Co. Limited offers a diverse range of businesses and services to cater to various financial needs. At its core, the company specializes in acquiring, managing, investing in, and disposing of distressed assets from financial and non-financial institutions across China, Hong Kong, and internationally. The company operates through two primary segments: distressed asset management business and financial services business. Within these segments, it provides a wide array of services including receivership, foreign investment, securities and futures dealing, financial bond issuance, interbank borrowing and lending, commercial financing for other financial institutions, approved asset securitization business, and financial institutions custody. In addition to its core services, China Cinda Asset Management Co. Limited also engages in various consulting and advisory businesses such as finance, investment, legal and risk management, asset and project evaluation, banking business, fund management, asset management, trust, financial leasing, real estate and industrial investments, and other related activities. Furthermore, the company is involved in cross-border securities brokerage, financial product trading, debt issuing, investment banking and holding, real estate development, commercial banking, hotel management, and aircraft leasing. These services demonstrate China Cinda Asset Management Co. Limited's commitment to providing comprehensive financial solutions to its clients. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The primary drivers of revenue growth or decline can be identified through an analysis of the key contributors to a company's revenue. On the growth side, investment income and commission and fee income have been significant contributors, with notable increases in securities and futures brokerage and insurance brokerage. Other sources of growth include net gains on disposal of subsidiaries, associates and joint ventures, interest income and other net gains or losses. In contrast, revenue decline has been driven by a decrease in interest income, as well as a decline in revenue from sales of inventories and purchases and changes in inventories. Additionally, fair value changes on other financial instruments have also contributed to the decline in revenue. It is worth noting that some areas of revenue have remained stable, such as Cinda Fund Management, fee income, and banking business. Overall, the growth drivers are largely related to investment and commission-based activities, while the decline is driven by a decrease in interest, income, and changes in inventory values. The net income of the company underwent a significant change between 2024 and 2025. On one hand, it decreased by $2,924.8 million, which is a 33% drop. However, this decrease was partially offset by an increase of RM 185.5 million in the same period. Looking at the profit margins, we can see that there were both positive and negative changes. The internal rate of return, IRR, decreased by 0.6%, indicating a decline in profitability. On the other hand, the net interest margin increased from 1.55% to 1.59%. Additionally, the cost-to-income ratio decreased from 34.8% to 33.72%, suggesting that the company was able to manage its costs more efficiently. However, there were also some negative changes in the profit margins. The return on average assets remained the same at 0.63%, but the return on average shareholders' equity decreased from 4.81% to 4.61%. Furthermore, the return on average assets and return on average shareholders' equity both decreased by 80% over the period. These changes suggest that the company's profitability was affected negatively in some areas. The company's financial performance indicates a strong ability to generate cash from its operations. According to the provided summaries, the company's cash inflow from operations was significant in both 2024 and 2025, with amounts of RMB 73,986,284 and RMB 28,988,290 respectively. A closer look at the operating cash flow reveals that it has been steadily increasing over the years. In 2025, the company reported an operating cash flow of RMB 14,024,522 on page 145 and RMB 34,825,357 on page 146. This indicates a substantial increase in the company's ability to generate cash from its core operations. Furthermore, the net cash from operating activities was also positive, with an amount of RMB 3,419,819 reported on page 199. Additionally, the annual report confirms that the company generated a positive operating cash flow of RMB 488,000 in the year ended December 31, 2025, as stated on page 400. In conclusion, based on the provided summaries and financial reports, it is clear that the company is generating significant positive operating cash flow. This indicates a strong financial position and ability to sustain its operations over time. The analysis of the company's financial data suggests that its debt level has significantly increased. The total financial liabilities have risen by 44.8% from the previous year, indicating a substantial increase in borrowings. This is further supported by the significant rise in short-term and long-term borrowings, with some pages reporting an increase of up to 13.9%. While there is no direct mention of interest expenses, it can be inferred that these higher debt levels may lead to increased interest expenses. However, a more accurate assessment would require access to the original financial statements or detailed information about the company's debt structure and interest rates. The company's performance varied across different segments and regions. Unfortunately, the distressed asset management business struggled, as indicated on page 29. Additionally, the elimination and unallocated portion of the business also underperformed, as noted on page 30. On a more positive note, the financial services business stood out as a strong performer, with its success highlighted on page 30. This segment's performance was a bright spot in an otherwise mixed bag for the company. Management's outlook for the company remains positive due to robust economic fundamentals. However, challenges persist in economic growth, including weak demand and potential risks. To address these challenges, the company will focus on its core responsibilities, risk resolution, and distressed asset disposal. The company has identified 5 key priorities in the financial sector: debt relief for key enterprises, stabilization of business operations, green and low-carbon transformation of traditional industries, technology finance, and green finance. Management is committed to deepening efforts in these areas, with a focus on maintaining and growing its core business of distressed asset management. In terms of strategy, the company will continue to prioritize risk prevention and control through improved mechanisms for asset quality and liquidity security. A new strategic planning system has been launched to guide deepening reform and transformation. Management is also investing heavily in technology finance and green finance, with a focus on promoting market-oriented DES business and effectively delivering the 5 priorities of finance. Overall, management's strategy is centered around maintaining financial security through core business operations, while also navigating strategic opportunities and risks in an increasingly uncertain environment. The company has a history of rewarding its shareholders through both dividend payments and share buybacks. In terms of dividend payments, the company has paid out dividends in 2025, with a proposed dividend of RMB 0.2801 per 10 shares. This translates to a total cash dividend payout of approximately RMB 0.069 billion. In addition to dividend payments, the company has also engaged in share buybacks. According to available information, the company has indeed bought back shares, indicating its commitment to returning value to its shareholders through various means. That concludes the financial summary for China Cinda Asset Management Co. Limited. Feel free to comment below, and I will be happy to answer them when possible.